Hello viewers, welcome to my channel. Hashim Ali Khan here. So now I am going to start the next problem on accounts of non-profit organizations. That is problem number 21. So far 20 problems I have completed. 20 main problems apart from short problems I have completed on non-profit organizations. So if you are continuously watching all the videos, definitely you are now in a position to attempt the problem on income and expenditure account and balance sheet of non-profit organization. So first time if you are joining, you may not be able to understand. So I suggest you to keep a rhythm on watching the videos. One after the other, if you watch, definitely you can get the good command. Otherwise, randomly if you join in between or leave in between, you may not be able to understand. So if you are really interested in getting the complete knowledge, watch the video from beginning. So I suggest you to go to the playlist of my channel, select the subject Financial Accounting 2. In that subject you will find the videos on accounts of non-profit organizations. Select those videos. First video I have explained in detail the meaning of the term non-profit organization, what are the features and what are the final accounts of non-profit organizations, receipts and payments account, income and expenditure account, balance sheet, how it is prepared, and what are the terms which are used in these videos. I have explained in detail. So without watching the first video, you should not watch the problems. That is my suggestion to you. Now I am going to start the next problem, problem number 21. Before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, hard copy, keep it ready. Now I am starting 21st problem. A summary of receipts and payments account of Sri Sai Siva Hospital for the year ended 31st March 2008 is given below. So our year ends on 31st March 2008. Now balance on 1/4/2007. Actually there is a printing mistake there. It is given 1/4/1997. No, it is not 1997. It is 2007. 1/4/2007 and 31st March 2008. No, there is a printing mistake there. It is not 31st March 2000. Some mistake is there regarding the typing. Actually, a summary of receipts and payments account of Sri Sai Siva Hospital for the year ended 31st March 2009 is given below. So make the correction there in the problem which you are having now. 31st March 2009. So here 1/4/2008. Make it is 1/4/1997 given. Cut off that 1997, make it 1/4/2008. And 280 rupees is the opening cash balance. Then receipts are subscriptions. 2000 rupees are received on subscriptions. Interest on investment at the rate of 7% per annum is 280. So 280 rupees is the interest received on investment. That means this hospital is having some investment. On that investment, the hospital is getting interest at the rate of 7%. And that interest comes to rupees 280. But the value of investments are not given. We have to find out how much is the value. 7% interest means if 100 rupees is the investment, 7% of 100 is 7 rupees. So in simple words, we can say if 100 rupees are the investments, 7 rupees are the interest. But how much is the actual interest received? 280 rupees. For 280 rupees, how much would be the investment? So here in this working note, I have explained you when investments are 100 rupees, we have supposed if 100 rupees are the investment, then interest on investment will be 7 rupees because 7% per annum. 7% per annum. So 7% of 100 rupees, 7 rupees. So we got an equation when investment is 100, 7 rupees is the interest. But actual interest given in the problem is 280. When actual interest is 280, how much would be the investment? So 280 divided by 7 into 100, you will get 4,000. So investment value is 4,000. Now you can confirm whether this 4,000 is correct or not. Calculate 7% of 4,000. Calculate 7% of 4,000, you must get 280. Yes, you got it 280. 7% of 4,000, it is coming to 280. That means our calculations are correct. The investment value is 4,000. Now, donations 580 rupees. Then charity show proceeds 400. Donations we have to see whether it should be capitalized or should be taken as revenue. So in the last sentence you see next page, donations are to be capitalized. It is given. Specifically given in the problem, donations to be capitalized means it should be taken to the balance sheet. So donations should be taken to the balance sheet. It should not be taken in income and expenditure account. Charity show proceed. These are revenue income. Charity show proceed, revenue income. Now payment side. Payment for medicine, revenue expenditure. Salaries, revenue expenditure. Sundry expense, revenue expenditure. Purchase of equipment, it is capital expenditure. Equipment is an asset. So it is a capital expenditure. So purchase of equipment should not be taken in income and expenditure account. That equipment purchase should be taken in the balance sheet asset side. Charity show expenses, that is revenue expenditure, we should take it. Honorarium to director, that is a revenue expenditure, we'll take it here. Now closing balance of cash 180, that will be taken on the asset side, cash in hand 180. So I have explained you all the items of receipts and payments account. Now I am coming to additional information. Particulars as on 31st March 2008 and as on 31st March 2009. The last year, current year. What are the items? Subscriptions due. Last two problems I am completely explaining about outstanding subscription, beginning of the year, end of the year. How much are the subscription received? 2000. Receipts it is given, subscription received 2000. To this, we add outstanding subscription at the end of the year. At the end of the year, 40 rupees. We add 40. And subtract subscription outstanding at the beginning of the year, 20. So you can see here, by subscription received 2000, add outstanding subscription at the end of the year 40. So add up 2040 minus outstanding subscription beginning of the year 20, deduct 20, 2020. Next, subscription received in advance. Exactly same point what we have discussed in the previous problem. Subscription received in advance. Last year subscription received in advance should be added, and current year subscription received in advance will be deducted. Exactly same way what we have done in the previous problem. So see here, add subscription received in advance last year 40 rupees, given in the problem 40 rupees last year, add up 2060 minus subscription received in advance in the current year 20, deduct 20, 2040. These rules you have to remember regarding outstanding subscriptions and subscriptions received in advance. Next, stock of medicines. This point also we have covered in the previous problem. Stock of medicines. So how much is the payment for medicines? Payment side you can see 1200 rupees. The payment for medicines 1200 rupees I have taken inner column. To this, stock of medicines at the beginning of the year will be added, and stock of medicines at the end of the year will be deducted, because opening stock is consumed during the year. The opening stock of medicines will be consumed during the year, and closing stock of medicines we have purchased but not consumed, so deduct. So here you can see opening stock of medicines added and closing stock of medicine will be deducted. Apart from that, one more new point is given in this problem. Amount due to medicine supplier. Amount due to medicine supplier. These are creditors for medicine supplies. So outstanding creditors beginning of the year, outstanding creditors end of the year. So outstanding, that is the amount due to medicine supplier at the beginning of the year, will be deducted, and outstanding medicine suppliers at the end of the year will be added. Because beginning of the year means last year we have purchased but we have not paid. Now current year we have to pay. Similarly, current year's outstanding means current year we have purchased the medicines but we have not paid. We have to add up. So current year outstanding added. How much is the current year outstanding? 480. 480 rupees should be added and 320 rupees should be deducted. You can see here 480 added. Closing bill of medicine supplies. Closing bill of medicine supplies 480 added. minus opening bill of medicine supplies 320 deducted. So 1160. That is the new point in this problem. Then value of equipment. See here. Value of equipment beginning of the year 840, end of the year 1200. Now first of all, beginning value of equipment 840. And how much equipment purchased during the year? Payment side you see. The payment side purchase of equipment 600. So 840 equipment was there at the beginning. During the year 600 purchased. So 840 plus 600, it is 1440. 1440. But end of the year it is given at the end of the year it is given 1200. End of the year equipment value is 1200. So actually 1440. 840 plus 600, 1440. 1440 minus 1200, 240. 240 is the depreciation on equipment. Exactly same way what we have done in the previous problem also. Building. Last year building 1600, current year building 1520. So 80 rupees deducted, 80 rupees less at the end of the year. Decreased at the end of the year. That is on account of depreciation. Just like the previous problem. When the value of building decrease, it may be on account of two reasons. It may be on account of sale or it may be on account of depreciation. But sale information is not at all given. So whatever decrease in building, we assume it as depreciation on building. So depreciation on building we have taken. So all additional information items I have explained you. Next page, donations are to be capitalized. We have to take it on the liability side. Prepare income and expenditure account for the year ended 31st March 2008 and balance sheet. Exactly same problem what we have done previous problem. The only one difference is outstanding medical bill supplies. Outstanding medicine bill. That is the only new point. Other points are very much same. Now first of all, before preparing the income and expenditure account, we must know the capital fund at the beginning of the year. For finding out capital fund at the beginning of the year, we have to make the balance sheet, opening balance sheet. 1st April 2008, opening balance sheet. Now first of all, on receipts and payments account, opening balance of cash. So left hand side you can see to balance on 1/4/2008. The opening balance is 280. So 280 rupees cash in hand I have taken. Apart from that, additional information at the beginning of the year 1/4/2008 or 31st March 2008. Last year's closing will become current year's opening. So last year's closing 31st March 2008. Current year's opening 1/4/2008, 1st April 2008. So subscriptions due means outstanding subscription last year 20. So outstanding subscription last year 20. Subscription received in advance, that is a liability. So here subscription received in advance last year 40. Then stock of medicines, that is an asset. So stock of medicine 400. Then amount due to medicine supplier, that is a liability. Amount due, amount payable is a liability. So amount due to medicine supplier 320. Next, value of equipment 840. Equipment 840. Building, value of building 1600. Value of building 1600. So all the opening values are taken except one item, that is investment. Investment is not at all specified in the problem, but one clue is given that interest received on investment at 7% per annum is 280. So 280 rupees is the interest on investment received, which is 7% on investment. So investment value is not given. So we have calculated investment like this. The investment value is 4,000. That means this organization is having investments of rupees 4,000. So investment 4,000. Now take the total on the asset side 7140. From 7140 deduct the liabilities 40 and 320. The balancing figure is 6780. 6,780 is the capital fund at the beginning of the year. It is not given in the problem. By making this balance sheet, we come to know there is a capital fund beginning of the year. Without this capital fund, we cannot complete the current year's balance sheet. Over. Now I am coming to the income and expenditure account. In income and expenditure account, first of all, receipt side. Receipt side will take the subscriptions. So subscriptions received 2000. To this, we add outstanding subscription. Remember, outstanding subscriptions or subscriptions due means same. It may be called as outstanding subscription or it may be called as subscription due. The outstanding subscription at the end of the year, 31st March 2009, added 40 rupees. Outstanding subscription at the beginning of the year will be deducted, 20 deducted. Similarly, subscription received in advance at the beginning of the year will be added. Last year, subscription received in advance last year will be added. Subscription received in advance at the end of current year subscription received in advance, deduct, minus, so 2040. Apart from that, interest on investment 280, charity show proceeds 400. That's all. All the receipt side items we have taken. One receipt we have not taken, that is donation, because specifically given in the problem, donation should be capitalized. That's why I am taking it on the liability side. Over. Now come to expenditure, payment side. In payment side, you can see first item, payment for medicine. The medicine, payment for medicine 1200. To this we have to add opening stock of medicine at the beginning of the year, added. Closing stock of medicine at the end of the year, deduct. Deduct. The opening stock of medicine 400, add up. Closing stock of medicine 600, deduct. Then medicine bill. The closing medicine bill will be added. That means the medicine bill outstanding at the end of the current year should be added. The closing bill of medicines 480 added. Similarly, opening medicine bill outstanding at the beginning of the year will be deducted. Then salary, sundry expense, charity show expense, honorarium. All the values directly we have taken. Depreciation, equipment. Beginning of the year equipment was 840. And during the year equipment purchased was 600. So if you add up 840 plus 600, you will get 1440. 1440. But in the problem it is given end of the year, it is 1200 only. So 1440 minus 1200, 240 is the depreciation. Similarly, building. Building value beginning of the year 1600, end of the year 1520. So 80 rupees is the depreciation. Now on a piece of paper separately you calculate the total of expenditure and total of income. In this problem you will find expenditure is more. The total on expenditure side is 3040. From 3040 deduct the income items, minus 2040, minus 280, minus 400. The balancing figure is 320. This is the deficit because expenditure is more than income. It's a deficit, right? The balancing figure deficit 320. This deficit will be deducted from capital fund on the liability side. Or now I am coming to the balance sheet as on 31st March 2009, liability side. Subscription received in advance at the end of the current year. At the end of the current year, subscription received in advance 20. Amount due to medicine suppliers at the end of current year for 480 rupees. Then donations 580 rupees. Capital fund beginning of the year 6780. 6780 minus deficit 320. Deduct 320, 6460. Liability side completed. Now I am coming to the asset side. Cash in hand at the end of the year 180. In the problem, receipts and payments account is given. Right side last closing balance you can see 180 rupees cash in hand. Outstanding subscription, current year's outstanding 40. And stock of medicines end of the current year 400. Equipment beginning of the year 840 and during the year purchased 600. So total 1440 minus depreciation 240. So ultimately 1200 rupees is the closing value of equipment. Building. Beginning of the year building was 1600, 80 rupees depreciation, 1520 is the closing value. And investment, beginning of the year investment were 4000, end of the year also investments are there 4000. That's all. Now if you find the total of liabilities, assets, it is tallied 7540, 7540. That's all. So this is the end of problem number 21. Come on, now we'll start the next problem, 22nd. From the following receipts and payments account of a club and from the information supplied, prepare income and expenditure account and balance sheet. So here we are given the receipts and payments account just like the previous problem, and some additional information is given regarding last year and current year. Right? Now receipts and payments account, you see receipts left hand side. To balance means opening cash, beginning of the year cash on hand 7,000. Then donations received 8,000, legacy 6,000. So this donation and legacy we have to see how to be treated. Sometimes it may be treated as current income, revenue income. Sometimes it will be capitalized. So normally in the problem it will be given how to treat the donations and legacies. In this problem, last line of the problem it is given donation and half of the legacies are to be treated as capital income. Specifically given. Donations you have to capitalize. It's a capitalized income. So take the donations to the liability side of the balance sheet. Donations. And legacy. Legacy it is asking you to treat half as income and half should be treated as capital income. So total legacies are 6,000. Total legacy is given 6,000. So half of 6,000, 3,000. So 3,000 legacy should be treated as revenue income. So you can see here legal income side legacy 3,000. Out of 6,000, half 3,000 we have treated it as income. Remaining 3,000 legacy we have to treat it as a capital income. So capitalized balance sheet. Donations completely we have taken on the liability side. Next, sale of old furniture. Some old furniture is sold and realized 75 rupees. And the book value of the furniture is given 80 rupees. That means 80 rupees worth of furniture is sold for rupees 75. That means 5 rupees is the loss on sale of furniture. That loss 5 rupees on the sale of furniture will be taken on the expenditure side. Expenditure side you can see loss on sale of furniture 80 minus 75 5 rupees. And the book value of furniture 80 rupees will be deducted from the furniture in balance sheet. Endowment fund receipt. First time we are coming across this term. Endowment fund receipt. It is a capital receipt always. It's a capital receipt. So this endowment fund receipt will be taken on the liability side. On the liability side you can see endowment fund receipt 10,000. Next comes sale of newspapers and sale of sports material. Both these are revenue income. Sale of newspaper, sale of old newspaper and sale of sports material 80 rupees. Next comes advertisement in the yearbook. That is also a revenue income. Advertisement in the yearbook 400 rupees. Proceeds of concerts, that is also a revenue income. Proceeds of concerts 2,700. Tournament fund. This tournament fund is called specific fund. So this tournament fund should not be treated as a revenue income. It should be taken as a capitalized item. Any expenses there that should be deducted. Now see the payment side, first item it is given tournament expenses 1100. So there is a tournament fund and there is a tournament expense. So both these will be taken on the liability side. On the liability side of the balance sheet, take tournament fund 1500 inner column minus tournament expenses 1100. Deduct 1100, 400 rupees should be taken on the liability side. Right? Next, subscriptions. Subscription arrear. Arrear means last year outstanding. Last year outstanding subscription received during the current year 600 and current year subscription 14,000 and next year in advance we have received a subscription in advance for the next year. How much? 800. Now how to treat this 600 rupees arrears depreciation arrears subscription last year will not be taken because it was last year's income. Last year's income already we have taken it in the last year. This year we have just received it, so it will not be taken. Current year subscription we will take 14,000 and advance subscription received, that 800 rupees will be taken on the liability side. Balance sheet liability side, subscription received in advance 800. This 800 we have received in advance for the next year, right? Next comes to payment. Tournament expenses, just now I told. Furniture. Furniture is purchase of furniture, asset side. This furniture purchase will not be taken in income and expenditure account. Furniture purchased is a capital expenditure. It will be taken on the asset side of the balance sheet. Crockery. Crockery is a revenue expenditure. We can assume that the benefit from crockery will expire within 1 year. So crockery life is only 1 year. So we can take the crockery as a revenue expenditure. So here crockery 1200 rupees, revenue expenditure. Sports material. Actually sports material is a capital expenditure. So sports material we have taken the depreciation on sports material. Because sports material beginning of the year we are given 1000 rupees sports material beginning of the year, and during the year sports material purchase 1200. So 1000 opening, 1200 purchase, and end of the year sports material is given 800 rupees. So there is depreciation. So depreciation on sports material, beginning of the year sports material 1000, during the year sports material purchased 1200. So if you add up 2200, but end of the year sports material is given only 800 rupees. So remaining what had happened? That is depreciation. So 1000 plus 1200 minus 800, 1400 rupees is the depreciation on sports material. Next comes salaries, is a revenue expenditure. Charity is a revenue expenditure. Advertisement is a revenue expenditure. Rent and taxes, revenue expenditure. Library books is a capital expenditure because books are an asset. The beginning of the year, how much is the library books? See the additional information given last line. Library books beginning of the year 900. 900 rupees is the library books at the beginning of the year. During the year library books purchased were 800. So 900 plus 800, 1700, and it is given library books end of the year 1700. That's all. So beginning of the year 900, end of the year 1700. How it has increased? Because during the year we have purchased library books. So library books will not come in income and expenditure account. It will be taken in the balance sheet. Next comes 7% investment 14,600. So during the year some investments were made. It's a capital expenditure. That investment will not come in income and expenditure account. That purchase of investment will be taken on the asset side. Investment 14,600. Next, cost of construction of building. That means cost incurred on construction of building. It's a capital expenditure. So it will be taken on the asset side. Building 5,000. Next item is balance. Closing balance is given 11,425. This is the closing cash in hand. So cash in hand we can take 11,425. So I have explained all the items on the receipts and payments account. Now additional information. Beginning of the year, end of the year. 31st March 2007, 31st March 2008. Sports material. Beginning of the year 1000, end of the year 800. Outstanding subscription 600, 700. Outstanding salary 230 and 120. Furniture opening closing. Library books opening closing. Donations and half of the legacies are to be treated as capital income. So specifically information is given. Donation should be capitalized and half of the legacy should be capitalized. That's it. First of all, before making the income and expenditure account, we have to prepare the opening balance sheet to find out the capital fund at the beginning of the year. Capital fund is not given. So we'll make the opening balance sheet. Just like the previous problem. In the previous last 3-4 problems we are preparing opening balance sheet. So in opening balance sheet, first of all I am taking cash in hand. The receipts and payments account left hand side to balance brought down. 7,000 rupees is the cash. So cash in hand 7,000. Now you see the additional information on opening balances. Sports material 1,000. So I have taken sports material 1,000. Next item, outstanding subscription 600. Outstanding subscription 600. Next, salary outstanding 230. outstanding salary is a liability. Salary is payable, whereas subscription is receivable. The outstanding subscription is receivable, it's an asset. Outstanding salary is payable, it's a liability. So outstanding salary liability 230. Next comes furniture 1080. So furniture 1080. Library books 900. Library books I have taken 900. All opening balances I have taken to make the opening balance sheet. Asset side, take the total 10,580. From 10,580 deduct 230, you will get 10,350. 10,350 is the capital fund at the beginning of the year. That's it. Now I am coming to the income and expenditure account. Income and expenditure account, income side, subscription received for the current year. The current year subscription specifically separately given 14,000. Separately given current year 14,000. So I have taken 14,000. Current year. To this we add outstanding subscription at the end of the year minus outstanding subscription at the beginning of the year. What we are doing in the last every problem, we are doing the same procedure. So current year outstanding 7,000 added. But beginning of the year says we are not deducting because already separately it is given. Arrears last year 600 is separately given. It is not included in 14,000. So only current year's outstanding we add up. So current year outstanding is how much? 800. Sorry. Current year outstanding subscription is 700. 700 rupees added. So 14,700 is the total subscription of the income of the year. Next, legacy. 6,000 is the legacy. But half legacy we are capitalizing. So remaining half. Sale of newspaper, sale of sports material, and advertisement, proceeds of concerts. All these are the revenue incomes. Take the total. Now expenditure side, salaries. Salaries are given. Salaries paid is 3,900. So salary paid 3,900. Outstanding salary end of the current year will be added. Outstanding salary beginning of the year will be deducted. Beginning of the year will be deducted. So outstanding salary current year 120, outstanding salary last year 230. Deduct 230, 3790. Apart from that, charities, advertisement, rent and taxes, crockery, loss on sale of furniture. Just now I told you 5 ways. Depreciation on sports material. Beginning of the year sports material was 1,000. During the year sports material purchased 1,200. The total sports material should be 2,200. But in the problem it is given sports material end of the year is only 800. End of the year sports material are only 800. So what had happened to the remaining? Depreciation. So 1,000 plus 1,200 minus 800, 1,400 rupees is the depreciation of sports material. Next, furniture. Beginning of the year furniture was 1,080. During the year furniture purchased 12,000. So 1,080 opening furniture. Purchase of furniture 2,000. Right? Minus sale of furniture. Furniture was sold during the year, it is given. Sale of furniture. Furniture sold during the year 80 rupees. So deduct 80 rupees. And what is the closing value of furniture? Furniture closing value is 2,400. So we want depreciation. The opening balance of furniture is 1,080. During the year furniture purchased is 2,000. And furniture sold during the year is 80 rupees. And end of the year furniture balance is 2,400. So deduct 600 rupees is the depreciation on furniture. That's all. All the items we have taken. Now separately you find the total of incomes and total of expenditure. So in this problem you are getting more income. Income side the total is more. So you are getting 21,300. Debit side, in a expenditure side you are getting less total. So deduct 21,300 minus deduct all the debit items. The balancing figure is 3,955. This is the balancing figure surplus. Surplus means excess of income over expenditure. Income is more, expenditure is less. surplus, and this surplus will be added to the capital fund on the liability side of the balance sheet. Now I am making the balance sheet. Subscriptions received in advance. On the receipt side, you can see advance subscriptions received for the next year, that is 800. Donations are capitalized, complete donations. Legacy, half of the legacy capitalized. Endowment fund. Tournament fund minus tournament expenses. The receipt side tournament fund, payment side tournament expenses. The receipts, tournament fund minus tournament expenses. Outstanding salary. It is given in additional information, outstanding salary end of the year. Then capital fund beginning of the year 10,350. To this 10,350 we add the surplus earned during the year. Add up surplus 14,300. Liability side completed. Now I am coming to the asset side. The cash in hand at the end of the year given in the receipts and payments account, last item. So cash in. Outstanding subscription at the end of the year. At the end of the year, outstanding subscription of 700. Sports material. At the end of the year, sports material value 800 given in the problem. At the end of the year, furniture value 2400 given in the problem. Library books. Library books is also given in the problem. At the beginning of the year, library books were 900, and during the year, some library books are purchased for 800. So 900 plus 800, 1700 library books. Investments are purchased during the year. Payment side you can see 14,600 investment purchased during the year. Assets. Similarly, cost of building construction. During the year, some building construction was made 5,000. Capital expenditure. That's it. After taking all the items, find the total of the liability side, asset side. You are getting 36,625. Balance sheet tallied. So this is the end of problem number 22. So totally 22 problems have completed on this non-profit organization, final accounts of non-profit organizations. I've explained each and every point in detail. Watch the video once, twice, thrice. Definitely you can get the complete command on these problems. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos, and lastly, don't forget to subscribe my channel. So we'll continue inshallah the next problem in the next video.